Something kind of crazy is happening in the crypto market right now. The conflict between US, Israel and Iran just sent oil prices flying for a while, and then suddenly oil pulled back like altcoins. And honestly, over the last few days, oil has been moving almost like an altcoin chart. Big spike, then a quick drop. But while everyone is focused on geopolitics, something much bigger is happening behind the scenes. Institutional money is quietly flowing back into Bitcoin. BlackRock's ETF is seeing strong inflows again, and investors like Michael Saylor hinting at even more accumulation. So the real question right now is Bitcoin getting ready for its next big move? Let's break down what's actually going on. Alright, let's start with the bigger picture. Over the last few days, the biggest story in global markets has been the rising tension in the Middle East. The situation involving the US, Israel and Iran created a lot of uncertainty across financial markets. And whenever geopolitical tension rises, one of the first markets that reacts is oil. That's exactly what we saw. Oil prices jumped really fast and at one point got close to $120 per barrel. But today it's $83, and the reason this matters is pretty simple. Around 20% of the world's oil supply moves through the Strait of Hormuz, which is one of the most important energy routes on the planet. So anytime there is tension in that region, markets immediately start worrying about supply disruptions. But then something interesting happened. After that big spike, oil prices actually started pulling back. Traders began to think the situation might not turn into a full global energy crisis, and when oil cooled down a bit, risk markets started stabilizing again. Bitcoin reacted pretty quickly to that. But honestly, the biggest story right now is institutional money. Since spot Bitcoin ETFs launched in the US, a huge amount of capital has been flowing into crypto markets. Over the past few days, we've seen some really strong inflows again. At one point recently, Bitcoin ETFs saw over $460 million of inflows in a single day. And during a short 3-day period, total inflows went above $1 billion. And once again, the biggest driver was BlackRock's Bitcoin ETF IBIT. This matters a lot because ETF inflows are one of the strongest demand signals in the market right now. When money flows into these ETFs, the funds usually have to buy real Bitcoin to back those shares. So that creates actual demand in the market. There are a few big names you should always pay attention to in this space. First of all, BlackRock, which is the largest asset manager in the world. Their Bitcoin ETF has been one of the fastest growing ETFs ever launched. Then you have Fidelity, another massive financial institution that also runs a spot Bitcoin ETF. And of course, there is ARK Invest and 21 Shares, which continue attracting capital as well. But one name that always grabs attention in crypto is Michael Saylor. And recently, Saylor once again hinted that another Bitcoin purchase could be coming. Even a simple post from him about the next chapter of Bitcoin accumulation got the market talking. And historically, whenever Saylor signals something like that, it usually means one thing: they're getting ready to buy more Bitcoin. His strategy has always been simple. He sees Bitcoin as a long-term treasury asset. And whenever market dips, he views that has an opportunity to accumulate it. Michael Saylor and his company MicroStrategy are still the largest corporate Bitcoin holders in the world. They have been buying Bitcoin aggressively for years. Now let's talk about what Bitcoin is doing. When the geopolitical news first hit the market, Bitcoin dropped pretty quickly. The price briefly touched the 63k range, but the recovery was surprisingly fast. That usually tells us something important. Buyers stepped in. Right now, there are two key levels the market is watching. Spot is around 63k, Resistance is around 64k. At the moment, Bitcoin is basically trading between those levels, and this kind of consolidations often happens right before a bigger move. So if we zoom out, here is the situation. Geopolitical tension increased in the Middle East. Oil prices surged, then oil pulled back. Bitcoin dipped briefly but recovered, and institutional ETF inflows continued. And this matters because Bitcoin is no longer isolated from the global financial system. A few years ago, crypto markets were kind of their own world, but today things like oil prices, interest rates, global liquidity, and geopolitical risk all play a role in where Bitcoin goes next. Crypto is now deeply connected to macro markets. If Bitcoin managed to break above 72k, things could move pretty quickly. In that case, we could see the price push toward 76k or 80k and potentially even 100k. Especially if ETF inflows continue at the current pace, institutional demand could easily drive the next leg up. But there is also risk. If geopolitical tensions get worse and oil spikes again, markets could turn risk off. And in that situation, Bitcoin could revisit 63k or even the 60k range. So the next few days could be pretty important. Now quickly about altcoins. Right now, there isn't a real altcoin season yet. Most altcoins are still underperforming compared to Bitcoin. The market is mainly focused on Bitcoin and macro developments, but in the next video, I'll do a deeper breakdown for the altcoin market and look at which project might be getting for the next big move. Over the next few days, I'll be watching three things very closely: the geopolitical situation in the Middle East, oil prices, and Bitcoin ETF inflows. Because those three factors could decide where the market goes next. Now I'm curious what you think. Do you think Bitcoin breaks 72k this week? Let me know in the comments. And if you enjoyed this quick crypto market breakdown, make sure to subscribe.